I've been waiting over a decade for a crypto setup this big. Ask yourself, when was the last time you saw 3 financial earthquakes hit in a single week? Picture this. A federal judge with one stroke of the gavel just shattered the White House's biggest trade weapon. And just like that, billions in tariff revenue went up in smoke. At the exact same moment, crypto is about to get the single biggest cash injection in its history. $5 billion freed from FTX's ruin, ready to find a new home. And I know exactly where I'm placing my bets. But that's not even the full story, because beneath the headlines, a decision in Washington just quietly unlocked the kind of floodgate that this industry has been waiting to see in over a decade. We're talking about a seismic shift, an open door for trillions in fresh capital to flood in. This could reshape who gets to win this cycle and who gets left behind. Let me ask you guys this. When the dust settles, do you want to be one of the people who watched the opportunity slip by, or the one who saw the setup before the hurt and made history work in your favor? I'm going to break down how all 3 shockwaves, courtroom chaos, crypto closure, and this once-in-a-generation unlock are creating the kind of moment that only comes around a few times if you're lucky, but at least once in a lifetime. You're about to see exactly how smart money turns market turmoil into absolute rocket fuel, and how you can position yourself while everyone else is still watching the headlines. So stick with me, ladies and gentlemen. This is going to be a banger, because the next 20 minutes could be the difference between you getting left behind or being early, bold, and right exactly where you need to be. So if we can for a second, let's just rewind the tape. Hey guys, Kyle from the future here. I was just about to head to the gym, but just as we were about to drop the story, this news just broke, and I want to give you guys the absolute latest. We were just about to hit publish, and then the US Appeals Court flipped the script yet again, overturning the US Court of International Trade and putting the tariffs back in play. It's barely been a month since we spun from reciprocal tariffs to a 90-day pause, and now the US Appeals Court round trip. So expect the ping pong to continue. And remember, tariffs are still the smallest of the 3 catalysts that we're about to dive into today. The real edge is understanding how the art of the deal chess match keeps shifting the macro board. It's likely that we see the Supreme Court try to appeal what happened today in the appellate court. So really understanding the section we discussed today about the tariffs will still help you navigate this market better. Okay, back into the story. Picture yourself in a Washington, D.C. courtroom, tension thick, so thick you can cut it with a knife. Just days ago, a 3-judge panel dropped the hammer on Trump's Liberation Day tariffs, ruling that they were illegal. Now, hundreds of billions of dollars in new import duties are suddenly in question. It doesn't mean the tariffs vanish overnight, but it's a huge blow, and it puts America's boldest trade move back under the spotlight, with the whole market waiting to see what comes next. This is power politics, and Trump, he's playing 4D chess. Over the past 24 hours, the media has had a field day mockingly referring to Trump's strategy as the taco trade. Trump always chickens out. But here's the truth. Anyone who's watched closely enough, and if you're watching this channel, you know that it simply boils down to a strategy and game theory. And let me tell you exactly how this playbook works.
Have coined a new term called the taco trade. They're saying Trump always chickens out on the tariff threat, and that's why markets are higher this week. What's your response to that?
We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation, but don't ever say what you said. That's a nasty question. Go ahead.
Trump goes hard. He admits it himself. He even said, even I was shocked by 145%. That's a lot, he said. But he throws out the wild card, essentially, and sends markets into a tailspin. Fear takes over the headlines, but then he pivots. He uses chaos as leverage and pulls the strings, gets concessions, and usually ends up with a better deal for the US. The art of the deal, baby. And if you're watching closely, you can set your clock by this pattern. Let me give you guys some examples. Let's make it real. In 2019, Trump fires off a tariff threat. Stocks tank, Bitcoin spikes, everyone panics. But weeks later, a pivot, a handshake, and markets rip higher. 2020, another standoff, another surge of fear. And then, right on cue, a relief rally leaves the doubters in the dust. In April 2024, Liberation Day tariffs drop, the S&P dives, dollar surges, and within weeks, legal drama flips the entire narrative. Suddenly, those same tariffs are on trial, and the market is sniffing out billions in potential refunds. So why should this matter for you guys right now? Because these are the moments when volatility explodes and fear takes over, where disciplined investors quietly make their moves. I'll tell you exactly what I'm looking for. When everyone else is talking politics on social media, I'm glued to market depth, open interest, and watching for when the crowd finally goes risk off. Every time the taco trade pattern shows up, it's your early warning that the setup is here. You don't have to call the bottom perfectly. You just need to recognize when panic is creating opportunity and have the conviction to act while the noise is at its loudest. And let's be honest, this court ruling, it's a shot of adrenaline straight into the market's heart, a reminder that even when the world feels tilted, the playbook hasn't changed for those who stay ready. But here is the kicker. While the world's glued to the drama in DC, there's a second shockwave brewing in crypto. And this one, it's $5 billion strong, and almost nobody's positioned for what happens next. Let's switch it up. The crypto industry is living through a once-in-a-cycle event that could quietly define the next phase of this bull run. Imagine being an FTX creditor. I am one. You waited for years with no answers, no roadmap, just a giant question mark over your future and your funds. Are you going to get them, and how much are you going to get back? Now, in the space of a few days, the bankruptcy estate is finally cutting checks. Over $5 billion unlocked at once and flooding back into the system. If you believe the mainstream media, you think that all that money is about to turn the market into a meme coin casino again. But let's break down who's actually getting paid and what happens next. Nearly 60%, about $3 billion, goes to Wall Street's distressed debt sharks. Ad testers, Baupost, Farallon. These are the pros who bought the claims for pennies when they realized everyone else was paralyzed. Their playbook? Simple. Collect the win, cash out, and move to the next distressed opportunity. This is what they do for a living. Don't expect any of that to flow back into Bitcoin, Ethereum, or anything else. For them, this is just another trade, not a reason to gamble or rotate into digital assets. They bought these distressed assets. That's what they do. They saw an opportunity. They made the trade. Roughly 20%, or about $1 billion, is headed to crypto native heavyweights. I'll include myself there, although I'm not nearly as heavy as Galaxy Digital, Wintermute, Multicoin, etc. These are the survivors and the strategists. With this payout, they're not rolling the dice on the latest meme. They're loading up on blue chips, Bitcoin, Ethereum, Solana, and maybe a few strategic infrastructure plays. Watch for these funds to add liquidity to leaders. This is conviction money, not casino money. And let's face it, right now, all eyes are on Bitcoin. They're rebuilding treasuries and positioning for the next wave. And you can already see this happening if you look at the right signals. BlackRock's Bitcoin ETF just smashed through 33 days. 33 days of straight inflows. $481 billion in a single day. Nearly $9 billion in a month. Bloomberg's Eric Balkunis has it ranked as one of the world's 25 biggest ETFs. Proof that Wall Street is pouring in while everyone else argues about risk. It's the same story on the Ethereum side. SharpLink Gaming, another publicly traded company, is adopting the Sailor playbook and is buying $425 million worth of ETH for its balance sheet. That's a new treasury model being built in real time. And guess what? Once they made this announcement, their stock pumped like a meme coin. And what about Solana? Well, institutions are lining up there also. Sol Strategies is preparing to raise $1 billion to buy more Sol. And DeFi Development Corp just became the first public company to hold Solana liquid staking tokens as a treasury asset. So it's pretty clear. Public companies are making strategic multi-million-dollar and billion-dollar moves, taking a page out of the strategy playbook. So when you hear that institutional money is coming for blue chips, this is what it looks like in the wild. The fire hose is already pointed at the winners. The final 20%, another $1 billion, lands with individual investors and smaller institutions. Actually, this is where I'll put myself, not in the other category. These are everyday users, a few savvy pros, and a lot of people still scared by the collapse. About 70% are expected to play it safe, rebuilding what they lost, stacking stables and blue chips. For many, this payout is a rare chance to either buy back into core assets or just breathe easy and finally move on. Sure, a teeny slice will chase the latest trend, but it's hard to imagine these creditors aping this money straight into the next trending meme coin. The overwhelming flow will probably be into the safest assets, the ones that actually survive the storm. The real impact is that confidence is finally returning. For the first time since the FTX collapse, the psychological overhang is finally lifting. The market is getting closure it needed, and smart money, especially those with real conviction, are using this reset to reload and build positions as the dust settles. Want to know how real capital moves back after a black swan? Don't look at price charts on payout day. Look at order books and on-chain flows in the weeks after as liquidity quietly shifts from the weak hands to the strong. But this isn't happening in isolation, because just as the crypto world regains its confidence, the broader macro landscape is primed for its own wave of fresh liquidity. Tariff refunds, ETF inflows, and a supply crunch colliding all at once. Let's tie this together. Right now, the world's watching the headlines we just mentioned and arguing about what it all means. But if you know where to look, you can see what's really happening. A double wave of fresh liquidity is about to slam straight into the market while supply is tighter than ever. First wave, tariff refunds. If the court decision holds, you'll see the billions that were sucked out of the economy just weeks ago now boomerang right back into the hands of businesses around the world. If this happens, some will rebuild inventories while others reward shareholders. But in every cycle, a slice always finds its way into risk, the part of the market where being early pays off. Second wave, FTX payout. We just broke it down. Billions in ready-to-deploy crypto capital now in the hands of the most resilient funds and battle-tested retail participants. And this is all landing right as Bitcoin's available supply is hitting all-time lows. Spot ETF inflows are stacking up aggressively. Each week, they're smashing new all-time highs. What a time to be alive. If you want one more sign that the cycle is truly different, just look at what's happening in Washington. The US Labor Department has officially rolled back its warnings against putting Bitcoin in 401 retirement plans. This is a huge deal. Let me clarify for you what that really means. For years, 401k administrators technically could offer Bitcoin, but almost none dared touch it. Why? Because the Department of Labor's guidance basically told them, don't go there. Administrators have a duty to act in your best interest, and nobody wants to risk being on the wrong side of a federal agency. And just for a little bit more context, those of you guys who don't know, in 2015, my mom was able to roll her retirement plan, her 401k essentially, into Bitcoin. But it was only because I convinced her and she had conviction enough to do that, and it wasn't easy. So this is a big deal. It's going to make it easier for those who want to passively have their portfolios managed by asset managers to now have essentially the green light to go ahead and do this versus all the manual steps that were required before. And it's not just small players either. BlackRock, Bitwise, Fidelity, they all ran into major resistance. Most companies are risk adverse and don't want the regulatory heat. But now, no more warnings hanging over their heads. For the first time, the playing field is wide open. Trillions in retirement capital sitting on the sidelines can finally consider Bitcoin as a legitimate part of the American nest egg. And they kind of have to as well, because they have a fiduciary responsibility to manage these funds in the best interest of the people that they're managing the money for. And now that you have companies coming into the S&P 500, like Coinbase, for example, and now that you have companies that are managing these retirement funds, like BlackRock and Fidelity and others, also heavily exposed into Bitcoin, buying the ETFs, allocating capital on the balance sheets, etc. A fund manager can no longer sit passively on the sidelines, especially now with the green light, and not allocate to crypto, not allocate to Bitcoin, at least. Let me pause here because this is the kind of moment you wait an entire crypto lifetime for. I've been part of this space for 13 years, and I can't count how many times I've heard, just wait until Bitcoin hits 401ks, then the floodgates open. Well, this is it. This is the turning point. Think about it. Practically every working American has a 401k. With a single policy shift, that wall just came crashing down. The doors are open for the first time ever. This is a seismic shift in who can participate, how many movers, and what mainstream adoption really means. Coinbase's CEO nailed it when he said crypto will be in every 401k in America sooner than anyone thought possible. That's the kind of milestone you only see at the very start of a new era, the golden era. So think about what's converging. 3 rivers of fresh liquidity merging, supply at historic lows, and regulatory environment that's now encouraging mass crypto adoption. Picture all that momentum exploding into one roaring flood. That's the setup right now. So what does smart money do in these windows? Chase every green candle? No. They position quietly, weeks before the headlines catch up. They accumulate when nobody's paying attention, letting volatility and panic clear the path. So here's my edge. I'm watching for the following shifts: liquidity building in blue chip altcoins, funding rates quietly flipping positive, and open interest starting to climb, which it is. Every cycle, it's the same. When chaos resolves and fresh money floods in, those who are patient, and you must be patient, and held their conviction are rewarded. By the time everyone feels safe again, the best entries are gone. So ask yourself, are you building your plan before the herd wakes up? Are you ready to load up while the headlines still scare everyone else out in the room? Because when liquidity, conviction, and a once-in-a-cycle reset collide, it becomes rocket fuel for the assets with real staying power. Look, if you're still here, you already get it. I see some people in the comments, I don't know if they're just trolling or they really just don't get it, but you must have patience. And yes, we see the price of Bitcoin today, currently what it was when it hit all-time highs. And so I've seen comments saying, oh, but the price of Bitcoin isn't moving. Again, do you want to be early before it explodes up? Or do you want to sit there and complain about how we're still at the same price that we were in January when we have all of this news clearly leading us to where I anticipate that we're going in the not so distant future? The biggest gains in any market, crypto or otherwise, aren't made when the waters are calm and everyone's in agreement. They're made when chaos is peaking, when the headlines are noisy, and when the herd is convinced that sitting still is the smart move. Right now, we are in that zone. Tariffs, at least for now, have been overturned, flooding billions back into systems, all while the final ghost of FTX has been laid to rest. The drama-filled headlines have split the crowd, but for those who see through the noise, these are the moments that shape the entire cycle. So as the news keeps spinning and the next wave of volatility comes, remember, chaos should be leveraged to your advantage. Short-term price can be deceptive. So ladies and gentlemen, this is why I make these videos for you guys on a regular basis, because you need to keep conviction, understand what's going on, and make sure that you're informed. Because the next chapter of this market will be written by the few who saw through the drama and moved with purpose. Stay sharp, ladies and gentlemen. Continue to stack your Satoshis, keep accumulating your Bitcoin, and I will see you guys on the next one. See ya.